So I'll be asking you some questions which are certificates asked.
Okay.
Right. What has been your career journey in finance? What has been your education background? And how did you end up being a fund manager? What has the journey been like?
Right. So that's a very interesting question, right? I started as an engineer because my father was also engineer. I worked for a year in plant. Then I decided that I need to do something more than this. So like MBA was a kind of, at that time everybody was doing MBA. So I also decided to go for my masters. I did my masters from Delhi School of Economics, and I did it in international business. But while I was going through the international business program, so my college is famous for producing the economists, which are very globally renowned.
Right.
For example, Amartya Sen and all.
Right.
They have graduated from the same university and college.
Right.
So, so there was some sort of influence of around finance on the campus, and that got me thinking that I have to get the best degree in finance. So I decided to go for the CFA program, and while I was doing the CFA program, I got to know about the depth and width of this finance field. And then after that, I started working with a wealth management company based out of Gurgaon, and that was the starting stone. I had to meet I got to meet a lot of fund managers while I was in the last work profile, and that was the time when I realized that the stock market is so deep and you have so many experienced people coming and guiding you. Have to have a very right approach managing the investments, and it was a non-discretionary investment that we're doing. So I identified a lot of leakage is there in the system in terms of return, because whatever we recommend, it's up to the client whether they want to invest or not. So then I decided to move to the discretionary side, and also I took a liking towards the stock. So naturally PMS was starting a journey as an analyst in a PMS firm was a stepping stone for me, and from then on I graduated to become a fund manager now.
What has been your greatest learning in this field?
So I think patience. So right from the first day when I identified the first stock, so mostly we go about doing a mid and small cap investing, right? And market cycles have become shorter. And earlier the cycle used to be longer, 8 years, 10 years, 6 years, but now it has become shorter. So when I started investing, I used to buy stocks, and then I lose hope just like 6 months or 9 months if the stock is not performing, even though the thesis is going correct. But over the time I realized that when I look back the stocks that I first identified, they have also produced very decent return over the years. But since I was not patient enough to hold on to those stocks, I missed out on the gains. So I think going forward, the change in my investing behavior was, if I have identified some stock, let it compound at least for 4 or 5 years and see the true gain that's coming out of it. So that's a great skill to have in the finance in investing journey.
So it's a related question. People say mid cap and small cap are at all-time high.
Right.
What is your view on that?
So market makes highs all the time, right? So we have to look for another factor, which is valuations. Are the valuations really at all-time high? And what are the underlying factors also in the economy? So when you look at the interest rate regime that we are, so market is a function of two things. The stock price is a function of two things. In the long term, the earnings direct the stock price, but in short term, the expansion and the contraction of the multiples determine the short-term return of the market. So at the juncture that we are currently today, we are standing. So here we are just at the cusp of the interest rate cut cycle. Now normally what we have seen, that valuation plays an important part. So even though valuations are at somewhere around the 10-year average or 5-year average, but can the valuation expand further? The answer is yes. There could be a possibility, because we are going into our interest rate cut cycle, and normally whenever the interest rate cuts, the multiple expands. Because if you do the valuation and do the DCF of it, so the discount rate goes down. Typically it means the terminal value goes up, and the kind of stocks that we are picking, those are mainly the growth stocks. So the most of the value of the stock price is derived from the terminal value. So you expect the valuation to expand further from here. So typically if you see the small caps or mid cap trading at a multiple of 23, 24, if there could be a 2% rate cut, the valuation can expand up to 30p. Now the other part is earnings. We have seen earnings slow down in the last 10 years, but the next 10 years would be very different. So we have all the right catalysts in place, and the earnings compounding at least for the next 4 or 5 years that we are factoring in for the entire universe is in mid-teen digit. And for the R coverage universe, we are seeing higher teen digits, and in fact around 20% or so. So if you factor in expanding multiple and good earnings, so it means that the stock price has a lot to go again.
Great.
So this is.
So
the-
I believe you are managing PMS fund management.
Yeah.
So why should a common investor, maybe having a portfolio of say 1 crore rupees disposable portfolio, below that I would not even ask this question,
Absolutely.
should look at a PMS vis-a-vis a mutual fund or any other collective investment schemes?
Right. So we have a very unique offering in that sense. We have identified that PMS we can't pitch to a client who has a net worth of investable corpus of 1 CR. That will completely distort the asset allocation.
Right.
Because 50 lakhs is the ticket size, right?
Right.
So if you invest the 50 lakhs in just one product, it will completely take off the asset allocation for the client. So what we have come up with, that we have a fund of fund, which is a mutual fund portfolio on a PMS platform. So there the client can invest majority of the corpus, which is like 60%, 70%, and then 10 to 15% if the client wants to have slightly higher risk appetite, has a slightly higher risk appetite and slightly higher exposure onto the stock side. So the client can invest into one of our equity schemes, which is let's say mid and small cap or large cap or multi cap. So that way the asset allocation will remain in place. The client can have the direct equity exposure as well through the PMS, and it will be completely diversified and balanced through the other scheme that we have, which is called All Seasons, which is a completely diversified portfolio.
So we all learn about money in our childhood.
Right.
Right? We have experiences about money. We are taught about money. So what has been your greatest learning in your childhood about money and money management?
So I think preserving is that preserving capital is something that we don't take seriously. And while growing up, I come from a very humble background. So whatever we used to do first of all, whatever the income that we had, we used to spend, and then whatever the remaining it was invested at that point of time in, let's say, FDs or gold or something like that,
Right.
because we don't have that much of booming market and awareness around the common masses.
Right.
But I think the savings part is quite underestimated. And normally when we get into the stock market, we see that this is a sure short way to make fortune, but it takes good 10-15 years to make retirement corpus or a sustainable corpus. So, but for the first initial years, you have to have a decent capital that will be saving. So the formula should be first you save, and you save so much that at least over the compounding, if you do a compounding over that 10 to 15 or 20%, then you can make some decent amount of return. So the idea is to save much for the at least first 10-15 years, and then let the company compound, and it will be a good amount of corpus that you can retire with. So
I'm tempted to ask you another question.
Yeah.
How is your engineering background helped you in fund management?
Oh, it has been a great I would say compliment to my entire skill sets. So I worked in the plant. For example, I'll tell you, we were meeting a management, and the management was saying that company is already running at a full capacity of 90%. We can't exceed the capacity. But I've worked in a plant. I know 90% is, it can't. A plant can even run at 100%, 110%. You just need to run it in 3 shifts. So it's not like it's a deterrent that you hear from the management and you don't have to take it on the face value. So for example, the kind of stocks I started to track or sectors to track, so mainly I started with automobile, then manufacturing. So those are the themes that I was quite comfortable with. I've worked in the setting. I know what it means just in time, and making the plans, how the manufacturing works, that which are the quarter going to be best quarters in a year for a company to deliver the margins. So those things I understand, and that helped me a lot in identifying and asking the right questions to the management. Because I worked in the plant, I worked with the workers. I know that the policies that a company make, so it's as equivalent as having the new technology in place.
Great.
So that were a few key learnings from my engineering background.
Okay, so another question: how do you manage risk in investing?
Yeah, so that's a very important question, and when it comes to managing risk in the small and mid cap side, it's paramount, right? So whatever we do, the risk has the central piece of it. So while managing the risk in the portfolio, we take it in the 3 way, right? The first is that macroeconomic risk. Are we near at the valuations high? Is it sustainable? The valuations going to be sustainable for next 3-4 years? This is the question that we ask while we start with some new product, or let's say we start taking the money from the client side. So for example, today, if you look at, we have the roughest, very rough 18 months period where we have seen the inflation touching 40-year high, yield going back to 20 years high, 2 wars, major wars, and one banking crisis in US. So we have so much of macro headwind, and still out of that we are we are coming out very stronger out of that, right? So macro headwind, macroeconomic wise, we are kind of stable now. We have seen the worst of it. The second is the liquidity risk. So there is an important study that's been done by the CFA Institute that tells us that the size of the of the asset that a company is managing and the return that it's producing, it's inversely proportional. It means the bigger you get, the lesser opportunity size that's out there for you to invest in the mid and small cap side. So for us, our mid and small cap fund is just 120, 130 crores. So it means we have a long way to grow, and we can easily get into the company and come out of the company without making much noise impacting the stock price. So that has been the biggest thing for us to save the returns that we have been making for the client. Otherwise, if the AUM would be higher and we have been known in the public, our portfolio. So if we have exited the company, it will have taken down the price with us. We would have taken down the price with us. So that's a key thing, that the fund size is smaller and we have a long way to go from here. And third is the promoter. So in a small or mid cap company, you're not buying the business. You are having an agreement with the promoter that he will be running the company in a very dignified manner and in a minority investor friendly manner. So for the company that we onboard, in the last 18 months, we met close to 60-70 promoters. And we buy only those companies where we have the comfort on the management side, because the business models are untested. So you are betting on something that's going to deliver or going to perform in future. But management is the person who will be be the key figure behind all of these things, right? So we have to have absolute surety on the management side, and then only we onboard the company. So these are the three key risks on the mid and small cap side, and that's how we try to mitigate it.
Great. We have a certification called Chartered Wealth Manager, which is basically on holistic wealth management.
Right.
So you have also done some certifications.
Right.
So what role do certifications like Chartered Wealth Management play in upgrading people and also helping people enter into this field of finance and wealth management?
I think it's very important. So, for example, I didn't have any official degree in finance, right? I did my BTech in mechanical, and then I did my master's in international business. But the only reason I'm here managing a fund is I did my CFA, right? So it helped prove my credibility to my first time employer. And the same thing goes for the CWM as well, or the other financial degrees which are out there. That if you have that degree, the recruiter will know that at least this much of the thing you will be knowing, and the rest could be easily trainable in the industry, right? So they hire people who know at least some basic, and then as per the job profile you can be trained. So to all the students who are aspirant for the finance field and wanted to make a career in finance, get the degree, get the qualifications. That will be your that will be your foot in the door for the industry. So that will help you to build a career, and after that, your hard work and your luck that will take you to places. CWM sahi hai.
Great.
Thank you.
Thank you. Thanks a lot. Thank you.